The Trump-Putin summit in Alaska is scheduled for August the 15th, 2025 at a military base in Anchorage, Alaska. It's a high-stakes meeting focused on primarily the Ukraine war, with potential discussions on ceasefire, territorial concessions such as Russia maybe retaining Crimea and parts of Donetsk and Luhansk, and broader US-Russian relations like sanctions and Arctic cooperation. It's a one-on-one session with only translators present amid warnings from Trump about severe consequences if no progress is made, and praise from Putin for Trump's sincere peace efforts. Local reactions in Anchorage are mixed, with excitement and protests planned. Gold, as a classic safe haven asset, often reacts to geopolitical events like this. Heightened uncertainty or conflict tends to drive prices up as investors seek protection from risk, while de-escalation or positive diplomatic breakthroughs can reduce demand and actually push prices down. Based on recent market analysis and real-time discussions, here's how the summit might affect gold price. Note, I'm not a financial advisor and this is speculative, as markets are unpredictable and markets could swing based on post-summit statements and actual agreements or breakdowns. Gold is currently trading around $3,350 per ounce. Gold is currently down slightly, about 1% this week amid anticipation. Potential outcomes: the de-escalation scenario. If the summit yields progress, such as a ceasefire framework, erase sanctions on Russia, or signals of reduced US-Russia tensions, this could lower global risk premiums, making gold less attractive overall. Here's why and how this might play out. In a reduced geopolitical risk, a deal on Ukraine could ease fears of a prolonged war, cutting safe haven gold buying. Analysts note that this might lead to a decrease in gold prices, as investors shift to riskier assets like stocks or oil, which could fall if Russian supply increases. For instance, if sanctions lift, Russian oil flows could rise, stabilizing energy markets and indirectly pressuring gold downward. Although I believe this is going to be a temporary downward shift, because in the background central banks are buying up gold fast. The market reaction is that gold would dip maybe 1 to 2% short term, similar to how it retraced from recent highs ahead of the meeting. Discussions on X highlight traders securing profits in anticipation, with some predicting a move to the 100-day moving average if peace optics do dominate. The broader context is that this aligns with ongoing Trump policies like tariffs, which recently boosted gold to record highs, potentially offsetting some of the dollar strength if talks succeed. However, if de-escalation weakens the euro or emerging markets even further, it might indirectly support a stronger US dollar, adding downward pressure on gold as a result. Potential negative outcomes, say escalation or a stalemate scenario. If talks fail, for example, Putin ignores ceasefire demands or tests missiles as rumoured, or no deal in particular emerges, this could heighten tensions, as hinted by what Trump has said earlier. This scenario actually boosts gold as a hedge. Gold prices might, in the short term, surge. Increased uncertainty means that breakdowns might spike volatility, with gold rallying on renewed war fears. Posts on X warn of exacerbated US-Russia relations if provocations like the Petrel missile tests occur during the summit. This could push prices upward towards resistance or even higher if it echoes past geopolitical spikes. For example, gold's 2022 surge amid the Ukraine conflict. Market reaction is a potential 1 to 3% upside move, with investors piling into gold. Analysts see this as strengthening as gold's overall bullish trend, especially if this isolates Ukraine further or prompts NATO responses. Recent patterns show gold benefiting from the Trump-era uncertainties like tariff and Fed pressures. The broader context is that combine this with factors like Fed rate cut bets and ongoing dollar debasement trades, failure could accelerate gold's year-to-date gains, which is about 37%. It is important to note crypto like Bitcoin might correlate as both hedge against fiat erosion. Overall, markets are pricing in cautious optimism, with gold oscillating in a tight range today. This impact could be short-lived unless concrete actions follow, for example, sanctions changes. For real-time updates, I can make further videos after the summit concludes. Thank you for watching. My personal opinion is that it's very unlikely a deal is going to be reached at the summit. I'm not going to sit here and pretend that I can predict what Donald Trump will do as a response, but whatever he does do is likely to very much affect the market. So stay tuned and I'll keep you updated. Thank you.